Welcome to XM.com. This is today's Daily Market Comment by Jarala Bospisuros. I'm Cristina Marujos. The US dollar traded slightly lower against most of its major peers on Monday, stabilizing somehow during the Asian session today. With no clear catalyst behind the greenback's breather, it seems like traders decided to liquidate some of their long positions ahead of Wednesday's FOMC decision. Wall Street rebounded, but instead of adding to the risk exposure, it is more likely that investors covered short positions to mitigate the risk of a surprise on Wednesday. The fundamental environment has hardly changed. The Fed is still expected to deliver another supersized hike on Wednesday, with investors fully pricing in 75 basis points without excluding the possibility of a 100 basis points hike. But with some participants still craving for a rate cut as soon as next year, an updated dot plot matching the hawkish vibes we got from Fed officials lately that interest rates could rise above 4% and stay there for some time may keep any hike-related retreat in the greenback short-lived and allow it to resume its prevailing uptrend. U.S. Treasury yields are likely to rise as well, while equities could resume their slide. Canadian dollar traders may lock their gaze on Canada's CPIs for August due out today. At its latest meeting, the Bank of Canada raised rates by 75 basis points, refraining from verifying expectations of a slower path from there onwards. However, with inflation expected to have slowed more, traders may start re-examining that case, something that could result in a weaker Canadian dollar. An extension of the downslide in oil could also add pressure on the loonie. Despite rebounding yesterday, the broader downtrend in oil remains intact, with its main drivers, strong dollar, recession fears, and lower demand, still on the front page. Gold traders also managed to take advantage of the dollar's break, taking the metal near Friday's high, slightly below the key resistance zone of 1,681. Despite the increased interest in the precious metal after it hit a 29-month low on Friday, higher yields around the globe are likely to keep it unattractive, which combined with a potentially stronger dollar may result in new lows. Speaking about rising yields, the Fed is not the only central bank expected to raise its benchmark rate this week. Investors are split between a 75 and 100 basis points hike by the Swiss National Bank, while they assign a 75% probability for the Bank of England to step harder on the brakes and raise rates by 75 basis points. The only major bank expected to stubbornly stay ultra-loose is the Bank of Japan. The widening rate differentials between Japan and the rest of the world will likely keep the yen pressured. It may be a matter of time before dollar-yen breaches the 145 zone. This was a Daily Market Comment. Thank you for watching at XM.com.